Hello, as we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, I'd like to tell you, if you've been watching the market, the last few weeks has been pretty wild. You can see a lot of movement around here, and because of that, volatility is starting to spike. Generally speaking, when volatility starts to pick up in the market as a whole, I like to stick to the index ETFs as my trading vehicles because one stock can move a lot, whereas the market as a whole could move a lot, but it won't move nearly as much as one stock that could have some crazy, crazy move. So, with the market getting super volatile, now's the time for me to basically get into the index ETFs and start making trades there. So, what we're going to do is this is the SPY, and right now you can see we're at roughly 30% IV right here. If I go to the NASDAQ, the Qs, you can see this is at 38. Obviously, fairly similar story, but just a slightly higher volatility. And then if I look at the Russell, this is at 24. Graph looks about the same, but the volatility is not as high. So, being a volatility-based trader, if I'm looking to make a trade in an index, which one am I going to go to? I'm going to go to the one with the highest implied volatility, which is the NASDAQ or the QQQ. So, let's go over the trade page. Now, normally I'd look to go right here at the 54 days because that's the monthly expiration. That's right in our wheelhouse and it's the most liquid. But if you open it up, you see these weird numbers here. And that's because there was a dividend and it's changed all the strike prices. And I don't like to play with strike prices that aren't like nice round numbers because they're usually not as liquid. So because of that, I'm out of the 54-day ones. And if I go here to the 40-day ones, you can see these are more normal numbers. So that's where we're going to make our trade in the 40-day expiration cycle. To save the trouble of running around trying to figure it all out, I've already done it for us. So here we're at 590. What I'm doing is I'm going $40 up on the call side, $40 down on the put side. And if you followed along with me over these months or years, you would have seen me make these similar trades and probably would have been a lot closer. The call and the put would have been a lot closer to the stock price when volatility is low. Obviously, we can't compare it now, it's already bounced. But one of the things to pay attention to is when volatility spikes, what that means is the market can move a lot more, meaning the stock price can bounce around. So when volatility increases, what that does is it allows us to go further away from the stock price where we make our iron condor because the volatility spikes the prices of the options, meaning we can collect a lot more by getting a lot further away. So that's the good part of volatility and why we like volatility, because we expect volatility to kind of decrease over time. It can spike, it can do all kinds of crazy things, but the bottom line is when things are more volatile, we can move our prices further away from the stock price. And that's the kind of the winning game of the volatility spike. So in this case, we're going $40 away. Because the strike prices are $5 wide, I'm forced to make a $5 wide trade. So as long as I collect at least $1.65 or more, $1.65 being I need at least 33 cents per dollar width in strikes, and because this is $5 wide, I need to collect at least $1.65 to make this a valid trade, and you can see right now we do. So, assuming everything stays the same, tomorrow when the market opens, we're going to go $40 up, $40 down, then buy the call and put $5 away to make it a $5 wide iron condor, and as long as we collect at least $1.65 or more, that is our trade in QQQ because it is the most volatile index right now. Stay on for a second because we're going to do some Black Friday sales. So look at the resources page here or look at the links below to access the Black Friday sales we're having currently on our website. And happy trading and happy holidays.